It's March 6th, JLD here, and welcome to MSTR. Today in the Treasury Titans, nothing in this video is financial advice, but look at Michael Saylor. He is riding the orange rocket. Sometimes the rocket's going up, sometimes the rocket's going down, but guess what? The rocket is always on fire. The rocket is always volatile, and volatility is vitality. Volatility, it's a gift from above. It truly is. It's a gift to the patient. It's a gift to the convicted. And Michael Saylor, man, he is riding that rocket. And Michael Saylor posted yesterday, there isn't enough Bitcoin for everyone. There's just not enough Bitcoin for everyone, especially when what is Stretch doing? Well, Stretch is doing this. It bought around 700 Bitcoin yesterday. Of course, this is just an estimate based off of strc.live's site, which is really fascinating to watch. You can actually click replay here, and they just do a great job kind of showing you all the Stretch purchases that are being ATM'd as the day goes on, and you can actually be tuning in and watching this live. It's very fascinating, and again, they have a pretty good estimates of how much they were within 6% last week. They've refined a couple things. I'm actually going to guess that they're going to be within 4% this week. So these numbers are pretty close. So around 700,000 Bitcoin were purchased just yesterday based off of Stretch ATM. Things are happening. The flywheel is happening. And then you have this amazing post from Saturn_credit about Stretch from price discovery to scale discovery. It's a long article. It talks about scale discovery, price stabilization, what's happening over the past 30 days. As you can see, there was some volatility here, but it's really the 30-day average price is really flattened out for the first time, and that's looking just fantastic. You can see what's happening here as these charts are kind of showing how long Stretch is at 100. And to me, these short these short lines right here, these were like the few days to a week at most before the snapshot happens, and weeks passed. Now you're going to start to see that this line extend out further and further because Stretch is going to likely be trading at 100% for 10 days, 10 trading days, so 2 weeks prior to the snapshot dates. So this chart is going to keep looking better and better. They go down through par analysis, which is cool and important. How the return to par analysis takes less and less time. The Stretch weekly issuance, again, these are before snapshot dates. And again, these charts are going to start looking better as well. The nominal amount in millions, this number is going to keep going up and to the right, obviously. And as I kind of scroll down here to the bottom, Stretch found product market fit in traditional markets. Saturn extends it to the rest of the world, unlocking 11% plus Bitcoin backed yield for global investors. Because one of the main points that Saturn makes in this is that Stretch is actually only available to a certain percentage of people that have access to the NASDAQ, essentially, to be able to buy on traditional markets. So it's a huge market for Saylor, which is why he's only focused on that. We're talking between 150 to 300 trillion dollars, like more money than Saylor can just know what to do with. So he's just focused on taking as big of a piece of a pie of that as possible. And then people like Saturn are coming in and they're tackling the rest of the world. So it's great to see how these products are being built on top of Stretch. It's just bullish for everything, for Bitcoin, for MSTR, for Stretch, for humanity. Rajat says MSTR bought almost 1,000 Bitcoin yesterday and has already bought about 620 today. And again, they ended at about 700 Bitcoin by the day's end. The current price is not sustainable based on these numbers. They will be buying at least 200,000 Bitcoin a year for the foreseeable future. That's 105 years of supply, but MSTR isn't the only one buying. BlackRock will probably accumulate more than MSTR because its clients want exposure. Down to 50 years of supply. Plebs are likely buying 10 to 100 coins a day, down to 45 years of supply. And that's if everyone who owns Bitcoin today sells what they have. What happens if Stretch is so successful that volume reaches $1 billion a day? MSTR will be buying at least 5,000 Bitcoin per day. That's an insane number, by the way, 5,000 Bitcoin per day. That means there's even fewer days of supply than expected. There isn't enough Bitcoin. Bitcoin under 100K is temporary. Take advantage while you can. And then Rohan shares this graph that Saturn took and posted about the longer Stretch trades near par, the more people trust it. And the more trust means it's easier for the mechanism to maintain the peg. The positive feedback loop is working. So you can see touched it here back in October, stayed there for a little while in November, touched it for a little while in December and January. I mean, this was a good stretch. Obviously, that was Stretch's best week. And now we've already surpassed that. And it's just going to keep on going to the right. So exciting, exciting times. Joe says, it's incredible that 6 years ago, Strategy created the simplest and most powerful business model of this decade, and almost no one copied it at scale. Buy Bitcoin and issue long duration USD liabilities with no margin call. Last year, they upgraded the model even further with a public digital credit. And still only one company, Strive, has built something similar. And again, I invest in Strive as part of the Treasury Titans. Somehow, the most simple, powerful business model, amplify Bitcoin with no margin call, is an extremely uncrowded trade. Chris says, here we go. Search queries for Stretch have hit an all-time high on Google. Are you starting to understand what's happening? I love it. Michael Saylor posts, Bitcoin-backed credit, capital, and equity on a risk-off day. He posted the day before when everything was green, but now he wants to show us what happens when things are red. Well, IBIT goes down. MSTR goes down more. It's called volatility. But what happens to Stretch on a negative day? Flat as a flippin' pancake. Stays above 100, stays above par all day long. And we have a great clip from Michael Saylor that you are not going to want to miss. I hope that you are really strapped in for what this proof of concept is meaning for Stretch, for Strategy, for MSTR shareholders, for Bitcoin in general. We are making it. We are getting there. Now, if only the banks would stop being unbelievably pathetic and blocking this clarity bill, things would really start lining up here. But of course, even after all things line up, there's always the next obstacle, the next challenge. It will never end. But we all know where this ship is going. It's going higher over time. So sit back, relax, and after our sponsor, enjoy Michael Saylor's wise words. If you're building in the Bitcoin era, structure matters. Treasury strategy, capital allocation, entity structure, it all starts with a solid foundation. And when you're ready to form your business the right way, Northwest Registered Agent helps you do more than just file paperwork. With Northwest, you don't just create an LLC. You build a complete business identity from day one. That means registered agent service, a real business address, operating agreement, domain, website, professional email, phone number, and built-in privacy. No juggling vendors, no sketchy upsells, no selling your data. They've been doing this for nearly 30 years, and they're the largest registered agent and LLC service in the US with over 1,500 corporate guides, real humans who know your local laws and actually pick up the phone. Northwest handles everything in-house, which means fewer hands on your data and privacy by default for every customer. Don't pay hundreds or thousands of dollars for what you can get from Northwest for free. Visit northwestregisteredagent.com/JLD free and start using free resources to build something amazing. Get more with Northwest Registered Agent at northwestregisteredagent.com/JLD free.
So with that, the digital credit ecosystem, it is emerging, right? Layer one, we can't take credit for. That's Bitcoin. Layer two, we're in the business of creating that credit instrument, right? What are we going to do at our company? Well, we're just going to build the AUM of Stretch as high as we can, build the liquidity as high as we can, laser-like focus until people have $1 billion a day of liquidity, $2 billion a day of liquidity, $5 billion a day of liquidity, strip the vol as low as we can, but we're never going to be able to offer pure digital money or digital yield in every possible flavor or package on every platform, nor do we want to. So the layer three is that digital money, digital yield layer, and we're already seeing an exploding ecosystem of partners, Buck, Saturn, Apex, Hope. It's very exciting. If you've got a Bitcoin treasury company, you got $500 million and you're trying to figure out what do you do next? Create an ETF, upgrade and wrap Stretch with it, and then get the license to be the first company in your market to be able to offer this digital monetary or digital yield instrument, right? So it's a license to print money. How do you make money? Well, offer 5-6% digital money in Japan to everybody and take 100 basis points off it. And that leaves me with, the result of all this. If you go about the process of creating digital credit, then you create value for the digital equity. So MSTR is digital equity. You can see for the past 5.5 years what's going on, right? Bitcoin is outperforming the S&P in gold. MSTR has amplified Bitcoin. If you can sign up for the vol, you can actually get the reward. Now, amplification creates volatility. How much? This is the top 10 company, the most volatile companies in the S&P 500. I'm showing the top 10 to you, right? We're number 3, right? There are 2 companies in the S&P that are more volatile, but here's a more important chart. What you're seeing there is the absolute open interest, where we don't have the highest open interest, but we're one of the top 15. But what we are is the number 1 open interest market cap adjusted. So in terms of the relationship of open interest to the underlying market cap, we are the most intensely interesting company in the S&P universe. And if you look at the bottom chart, that's showing trading volume, liquidity. And what you can see is we're the most liquid equity in the entire S&P universe. Okay, so did we actually spend money to get that? No, we didn't spend a dime. We spent no money to become the most liquid, most interesting company in the entire S&P 500 universe. That is the result of creating digital credit on digital capital, right? And you know, what is the use of the capital? The use of the capital is to create the credit. What's the credit do? The credit creates amplification. The amplification creates Bitcoin per share. The Bitcoin per share creates the equity premium. It is the function of the company. And if you turn up that amplification, you can double the Bitcoin per share over 7 years. You might triple it over 7 years. So if you're the equity investor, you're buying a company that generates Bitcoin per share. If you're the credit investor, you're buying a credit instrument to pay US dollar yield. But it's just a very simple swap of Bitcoin yield for US dollar yield. You can't have the one without the other. But as you can see here, this is a very powerful model. And the way it works out is once you crank up the amplification, you can expect to outperform the Bitcoin by anywhere from 30% to 100% or more, and have a heck of a good time while you're doing it. It's definitely very interesting. For those of you interested in the relationship of amplification to growth rate, here it is. It's not very complicated. And on the subject of digital, it's all recorded. You can download that, and you can screenshot that and study it. CJ will probably do 1-hour podcast on that formula. What's the second best? There is no second best.